Median black household net worth is on the path to hit zero by 2053. What's going on, guys? Welcome to the Credit Plug channel. So I wanted to follow up on the video I put out a couple weeks ago about one of the major issues that myself, as well as a lot of other content creators, have seen in the personal finance space, right? In that video, I referenced this particular report, and this was in reference to the black median net worth predicted to be at zero by the year 2053. And, shout out to another content creator, Money Codes. He actually did a response to the video I put out and made some really good points. And so I wanted to elaborate a little bit on this and kind of explain why there's a bigger issue at play. This Road to Wealth report is basically saying by 2053, the black median net worth is going to be zero. Now, mind you, this report came out in 2017. You can see up here. Just to kind of give you a summary, this analysis is coming from multiple different social policy research organizations. Pretty much what they do is they analyze data from U.S. Census Bureau data. They're getting their data from U.S. Census Bureau survey of income and program participation. Now, I did used to work in survey methodology at one of the major federal statistical agencies, so I'm very familiar with how they're actually collecting this data, creating these different surveys to collect this information. They look at data between 1983 and 2013. So even though this report came out in 2017, the basis of the research in this is looking at a time period between 1983 to 2013. And what's actually striking about this particular report is that they actually have predictions in 2024. The interesting thing about it, again, this report is nothing new. This report has been out for over 7 years. Now, let me just summarize the key findings. Now, again, I don't agree with everything in this report, particularly when it comes to these policy interventions to resolve the issue, because their basic proposals for intervention to stop this from happening, from black median worth going to zero, is by taxing the wealthy people and, giving these guaranteed job programs for black people. It has no mention of starting businesses or anything like that. But the major key finding, and let me just read this, it says, if racial wealth divide is left unaddressed and is not exacerbated further over the next 8 years, median black household wealth is on the path to hit zero by 2053. About 10 years after, it is projected that the racial minorities will comprise the majority of the nation's population. In sharp contrast, median white household wealth would climb $137,000 to $137,000 by 2053 and $147,000 by 2073. By 2024, median black and Latino households are projected to own 60 to 80% less wealth than they did in 1983. By then, the continual rise in wealth inequality between median black, Latino, and white households is projected to lead white households to own 99 and 70 times more wealth than black and Latino counterparts, respectively. So pretty much what they're saying is that by 2024, white households are going to own 99 times more wealth than black households. Now, in 2013, which was 11 years ago, the median black household wealth was $1,700. Overall, when we're looking at the country as a whole, $63,800. And when we look at the white households, $116,800 Latino. Now, I want you guys to pay attention, right? So as we go down, this is like further points in time, right? So 2013, 2020, 2024, 2043, 2053. So right here, 2053, median net worth is going to be zero, right? Now, let me explain to you guys the difference when it comes to median versus average. Average is basically you add up everyone's net worth and divide it by the total number of households. That will give you the average net worth per household. And then the median is going to be literally the midpoint. So if you look at the distribution of all household wealth, the median is right at the middle. So 50% will be less and 50% will be greater, right? So how to interpret this: median household wealth for black households in 2053. So that pretty much means that, or half of black households will have a net worth of zero by 2023. So that means about 50% are going to have a zero net worth. And then when we look 20 years later down the road, a negative net worth of $850. Just keep in mind, when you look from 2013 onward, Black household net worth is decreasing, right? Median Black household net worth is decreasing. For Latinos, it's also decreasing. For whites, it's actually increasing. And then when we look at the nation as a whole, it's actually going down. So what does that really tell you in terms of what's going on, right? By 2053, Black and Latino are basically going to be the majority, whereas, whites are going to be the minority in terms of portion of the population. So basically what that tells you is that you're going to have a large segment of Black and Latino Americans who are going to have a net worth that is diminishing. And then you're going to have a minority of, white Americans whose median net worth is actually increasing, right? Let's look at credit scores real quick. So this is from Investopedia, and it shows the average credit score by race, right? So you have Asian here at 745, white at 734, other 732, Hispanic 701, and Blacks at 677. So you might see 677 and think, okay, that's not that bad. There's a difference in average versus median. Okay, let's look in comparison to the Urban Institute. And I actually did a separate video about this a couple months ago. This is looking at the median credit score in 2020. So this is February 2020. During COVID, actually, credit scores had gone up between 2020 and 2021. And the reason why is because a lot of people were able to pay down debt. There was a lot of forbearance in terms of credit card payments, rent payments, mortgage payments, and things like that, student loans. So people's credit was not as impacted, and the savings rate was a lot higher. So a lot of people were able to pay down debts. So that actually helped with the overall credit score. So at the onset of 2020, the median credit score was a 693, right? So that's the median in the United States. Half of Black Americans Vantage score of less than 593. So what do we know about a 593 credit score? That's subprime credit. There's very few things you actually can qualify for with a 593. That's bad credit. There's really no other way to spin it. When you look at the white community, it's 718, Hispanic 652. So you see, even when we're comparing the Black community and the nation at large, that's a 100-point difference, a 593 to a 693. And then when you look at the white community, that's even a bigger gap. That's like, 125-point difference. 677 doesn't sound so bad, but then you're also thinking like, well, this says 677 and this says a 593. You just have to keep in mind that when you're doing averages, take everyone's credit scores, add them all up, and divide it by the total number of people. The average can actually skew things upwards from the actual distribution of those credit scores. And let me give you an example of this really quickly, just to sort of illustrate. And this is why, in my opinion, I think sometimes the median credit score can actually be a better measure than the average. So, and again, this is just a small sample size, but let's say these 7 people, you have person number 1 with the 840, person number 2 with an 820, person 3 with a 780, person 4, 610, a 580, 540, and 520, right? If you do an average of these credit scores, the average is a 670. Whereas the median, remember, the median is the midpoint of the distribution. So half of the data points are going to be below and the other half is going to be above, right? So 610 is the median, right? That's a 60-point difference between the average and the median. Now, why is the average so much higher? Again, because you have these 3 credit scores that are pulling up the average of everyone below. When you look at this set of data points, okay, the average is 670, but 4 out of those 7 don't even have a credit score above or at 670, right? You have a 520, 540. So anyways, my whole point about this is that this can throw off the distribution. This, in my opinion, is going to be a more accurate depiction of the distribution of credit scores, looking at the median versus the average. Because again, if there's more white people who usually have a higher credit score, if we're doing an average, those higher credit scores are going to bring up the other credit scores, especially because, obviously there's, black people only represent 13-14% of the population. If a smaller group of people have lower credit scores and a larger group of people have higher credit scores, those higher credit scores are going to bring up the averages overall. That's why, again, I think median is a better statistic. So let's cover something else, right? I wanted to look into home ownership, and just to kind of give you guys a historical kind of view of it. And before we go into that, I just wanted to share that this information that I'm referencing, you could find it on the U.S. Census Bureau website, right? And this has historical data on a variety of different statistics when it comes to housing, home ownership. Let's first focus on the early 2000s. So as you guys know, in 2007, 8-ish, there was an economic downturn, right? Referenced as the Great Recession. So this shows home ownership rates just overall in the U.S., so the total population. So we see 2003, 68%, and it actually was increasing 68, 69. And then you could see after 2007, so in 2007, it was 68. Then it started to decrease substantially between 2007 and let's say 2013, which was at 65.1%. So overall, when we're looking at a national basis in this 10-year period between 2003 and 2013, the home ownership rate in the United States decreased by 3.2%. But when we look at, let's say, the white population, right, non-Hispanic white alone, it went from 75% home ownership, 75.4% home ownership to 73.2. So that only decreased by 2.1%. So overall, better than the national average. Now, when we look at black right here in yellow, it went from 48.1% to 43.1%. So that's a 5 percentage point difference. So the black home ownership, the change in the black home ownership between 2003 and 2013 was more than twice the national average. As a content creator, I work with a lot of banks. I get to see a lot of back end information in terms of approval rates. My audience tends to lean a lot more towards, black and subprime. And what I've noticed recently was just an uptick in credit card denials, loan denials. The conversion rates are very low. And I'm starting to notice that there's a couple of causes for this. Overwhelming large percentage of people in that lower subprime credit are not really looking to involve themselves in wealth building activities such as fixing their credit the legitimate way, having financial integrity, building banking relationships, buying real estate, or even starting businesses. And I also wanted to point to something else that I've noticed. Now, when you go on to YouTube, for example, and again, I'm just highlighting this, this is not a knock at this particular content creator, but something I notice is that when it comes to, let's say, let's say, for example, SNAP program updates or, EBT updates, food stamp updates, these videos get a lot of views. And if you just check out, and this is just an example, right? A lot of people are tuned into this type of content, right? EBT increases, IRS payouts, Social Security increases. And, so when you look at this, people who are consuming this type of information are part of that lower social economic class that is not owning homes, is not building wealth, and is just at the lowest part of the economic spectrum in the United States, right? And again, this example is not anything with the content creator. I was just trying to make an example of how many people are actually engaged in this type of content. And these videos get a lot of views. I mean, if you look at this was from a year ago, 1.2 million views, EBT, emergency allotment, stimulus checks. These are basically people who are at the lower end of the economic totem pole. And another thing I wanted to sort of illustrate as well. Now, I talk about this all the time about CPNs, right? So if you just go to YouTube and type in credit CPN, most of the people that you see on here, are Black Americans, right? How to do CPNs and, I mean, you don't have to go any further, right? This type of content, again, appeals to a lot of lower income Black Americans. And what I've noticed is that this content is actually more engaging and more relevant than, let's say, content about starting a business or content about getting your paperwork together or content about just trying to build banking relationships and do things the right way, right? And another thing I wanted to illustrate to you guys as well, and this is something that I noticed with, my main channel. So I've done a couple reviews about CPNs, right? So if you look here, these are just some of the videos I've made about CPNs. And my stance has always been to stay away from it. Don't get yourself involved in it. But I did want to just read you guys some of the comments that I received just from some of these videos, right? The banking is so racist, F them, right? And again, a lot of these people are defending the lack of integrity, right? Going into these banks, lying on applications, running off on the banks, run off on the plug, right? A lot of people are into that type of thing. This person also said the scammers are in here defending CPNs real bad. So I just wanted to read some of these comments, right? Look, this person saying, "Oh, I don't think it's just Black people taking advantage. I think it's every skin color." This person right here, he just be talking when he has nothing to make a video about. Sometimes it's just good to not make a video. So a lot of these people getting defensive. This person said, "Clearly you had nothing to make a video about. Majority of CPN numbers are not stolen socials credit plug. I swear you are the biggest capper," right? So a lot of these people are getting into defense mode because I'm just calling out, what it is, right? It's fraud, right? Using the CPN to get money from the bank is a fraud, right? And a lot of people go about this, defending it. This person says, "It's all an attempt to make things harder for individuals that are struggling. The whole banking system is a fraud. They're the ones stealing from us." This person also says, "Politicians and wealthy people have been using CPNs." So here's the thing. None of the, wealthy people or well-known people that I know are involved with CPNs, right? Everyone has good credit. Everyone has paperwork. Everyone has verifiable income. No one is trying to, defraud the banks, right? And so this person says this article is from 2009. It's 2023, about to be 2024. CPN use is at an all-time high and it's continuing to rise. They haven't stopped anything. I'm not saying continue down this road, but understand what you were doing, right? So another person coming to the defense of lack of integrity, right? And it's funny when I do these videos, a lot of people who usually don't engage in other types of videos definitely engage in this. And the reason why is because they are triggered, right? It's like when something resonates or something hits home, people feel obligated to react to it, right? So this person says, this would not happen if Black people, if they gave Black people reparations, right? A lot of cap in this video. MFs don't know how to use CPNs right, right? So people talking about, people are not using them the right way when you shouldn't be using them to begin with. So yeah, and this is just more examples of, people basically defending it. People basically defending it, right? And this is the type of reaction that I get, right? And just take a look at all the people who are defending it. This is a clickbait video. That's not going to shut the government. Got CPN millionaires and billionaire companies have CPNs. It goes on and on, right? I just wanted to just kind of dig a little bit deeper in the numbers and kind of explain what I've noticed. Again, I even get feedback from, certain sponsors where it's like the amount of fraud applications have gone up or the approval rates have gone down because a lot of banks have implemented tighter KYC, those are know your customer compliance. They've also tightened underwriting. In this information age, a lot of these banks are now using these third-party APIs that can verify information cross-referencing with the Secretary of State, cross-referencing with the Social Security Administration. You have TaxGuard that's checking for outstanding tax liens. You even have this LexisNexis fraud intelligence report, which basically pulls up your entire life history, beyond just credit score, things from your driving record, your insurance claims, different name variations, every address you've ever lived at, any delinquent accounts or back taxes that you owe. So there's so much more information right now. If your data points are not lining up, or if there's anything sort of funky with your financial information or personal information, it's going to be harder to be able to get access to financial resources from the banks. And therefore, when we go back to this, road to zero wealth, the reason why I think this is going to happen is for a lot of what I just showed you, right? A lot of people have basically checked out or quit, or they're not trying to participate in wealth building activities. Like I was saying, all the views you see, people checking for EBT, stimulus, food stamp updates, that's not wealth building behavior. You have the credit scores that are, lower than the national average, right? 50% under a 593 based off of 2020 data. And I think it's probably getting worse, right? Because this was during the whole stimulus period. A lot of that has washed out. We know consumer debt has actually reached record highs, delinquencies and everything are hitting records. So I wouldn't be surprised if the median credit score has actually dropped a bit because, again, this was during the good time. This was during the time where people had record savings. Going back to this whole road to zero wealth in 2053, I actually think it might happen before 2053, but it's 100% on that path. And I think going forward is going to be harder, especially when it comes to home ownership, right? Right now we have home prices that are just skyrocketing. And then if you have a degradation in wealth and credit score and qualifications, it's going to get harder for you to be able to qualify for financing to purchase homes. So that's why I always also think that the home ownership rates are going to start to decrease. I would say probably starting this year onwards, right? We're going to see just a downward trend in home ownership rate, and the gap is actually going to continue to widen. So again, I just wanted to kind of peel back the layers a little bit and share some of the data and information. But anyways, that's all for today's video. Let me know your comments and questions right down below. And until next time, take it easy and we'll talk to you soon. Peace.